So in this video, I wanted to talk about and show you guys and pretty much explain how to take a trade, how you know when to take a trade. So I start out on the daily time frame, and I look at a stock and I say, do we have any level that's been a key level, right? So you look at Boeing, and it keeps getting stuck at this 210 level. You're like, well, why is that? And you look back over time, this like 206, 207 range is kind of where it has been the critical point for this stock, right? So it's no surprise that it's stuck right here. And you can see that we got an anchor VWAP from the October 2021 earnings, and that's just a volume weighted average price. So this is kind of showing you the average price with weighting to volume over time since earnings. So it's kind of like, well, it's an indicator, it's a guide essentially. So you go to a shorter time frame. I go to the 65-minute time frame, and you can see that Boeing has been tagging this anchor VWAP. It's just been tagging it consistently. You go back a few more days, you can see that this level was holding as support. Then it flushed it. Then it started rejecting there, and it keeps rejecting there. So now you got to be ready to play the next move. It looks like it's going to be a breakout above this level, but in order to trade that, we would go to the 5-minute time frame. I will turn on my day trading template where it pulls up the 8 EMA, the 21 EMA, and then the regular VWAP, as well as volume. It's showing me volume down here at the bottom, right? So the pivot points are these blue lines, and they are basically showing me resistance and support levels. The 8 EMA is the blue line that's tracking the price. The 21 EMA is the purple, the VWAP, the regular VWAP for this specific day, uh, and this time frame is the orange line. So I use all of this in conjunction with levels that I clearly see from a bigger time frame, and I say I need Boeing to close above that 210 level. So we don't just look at it and say, oh yeah, as soon as it close above this angle VWAP, we want to play it. You got to give yourself a buffer. So really it's been hitting at about 209, 209.5 up in that range. So you say, let me add on $1. So I wanted to break above 210. You can see that it hasn't been able to do that. 210 is also like a psychological number. That's where a lot of people are going to want to come and sell, right? So if it can break above that, then you're going to make a move higher. You want to see it break above these highs that it's been setting, and you want to see it break with volume. It hasn't done that. It's made attempts to do that on dead volume. You see no volume here. So you could have probably scalped this and been okay. But as far as like entering like a short-term swing position or even a day trade, to be honest, you wouldn't really want to take anything like this. So going to a specific day, let's say it is Friday, and I'm looking at this and I'm like, okay, it looks like it might want to go for a run into closing, but we don't really have any volume, and it's still not even getting above that 209 level. It's not above this pivot point that I got right here. If you start getting 5-minute candle, well, a 5-minute candle that closes above this level, you let it close above that level. You see if you got volume, and you say, okay, I'm going to buy the pullback. Or you can shoot and try to scalp it, right? So we close above 210. You might take an entry. Say you got $1,000. You might start with like 300 or 400 there, right? And then you're ready to add more and scale in as it starts to pull back. You'd use your EMAs as kind of a guide, and your VWAP as a guide to say, okay, it just broke. Now it's pulling back to the 8 EMA. I want to take my entry here. Or it's pulling back to the VWAP, or it's pulling back to the 21 EMA, which is also right at this pivot point that it just broke above, which also coincides with that resistance point from that previous day, which also coincides with the previous resistance that it kept rejecting that. So you say, we got volume, we're closing above levels, we got a healthy pullback, let's play a bounce and let it break. You get in on the bounce, and a lot of people know how to make great entries. The problem sometimes comes when you have to exit a position. So it's like you want to hold until Boeing go from 210 all the way to 250 in one day. probably not going to happen. You can also have a problem with selling positions too early. So when you have something that breaks, a lot of people um, they'll jump in while Boeing's at 211, and then Boeing pulls back to 209. Now they're down like 40%. They're like, well, what just happened? So you got to be ready to scale in. That's why I say scale in first and foremost. If you start flushing levels, then you clearly know it's just a bad play, and that's when you want to use your risk management, and you'll get stopped out, so you'll sell for a loss. So you spend that time buying. You spend like a minute or two buying, or as long as it takes to continue to pull back to the levels that you like, the indicators that you like, and you let it rip, right? So most of the time, I'll take profit at 10% or $100. That's my rule because you don't know what's about to happen in those next few moments. So what I've been doing lately is I'll take profit and I'll leave. I'll pull out, say, like the initial investment. So say I put in 1,000 and it is up to 1,100. I'll pull out 1,000, let the 100 run, and I'll put a trailing stop on it. Or if I really, really like the setup, I'll just let the whole thing run and just put a trailing stop loss on the complete order. So when you do that, you're risking the last part that I just said. You're risking taking a washout, right? So if I go up, if I put 1,000 in and I'm up $100, so now it's worth 1,100. I'll put like say a 10% trailing stop on it. So that means I'll break even at worst. So that means if I bought a contract for if I bought 10 contracts for $100 and then they all go up to $110, I'm gonna put a trailing stop loss at $10. So at any point when those contracts lose $10 in value, I sell. I walk away, I go on about my day. The contracts could jump all the way up to $250, and I'll still be holding that position so long as it has not declined $10 from any specific price point. So if it jumped from 100 to 110, I set my trailing stop. Then it jumps to 117 and then it pulls back to 110, I'll still be holding that position. If it pulls back to 107, that's when my order will sell, and I'll have made $7 per contract, so $70, right? So you still get profit, but like I said, this would be something that I really like to set up on, and I think it could run. So that's kind of the whole sequence I go about when I say I want to get into a position, and that's how I go about exiting a position. If I see that we at like hard resistance, I'm probably not even gonna waste my time setting a stop loss. Or trailing stop. I'm just gonna probably just take profit and go on about my day because sometimes really just no point. But you really never know. If stuff get wild, anything could happen. But just do a quick recap. You don't have to have a million indicators on your screen. All you need is a key level starting from, say, the daily time frame. Then you go back to the hourly, or a lot of people do use the hourly, but coincidentally enough, uh, what is it like? The however many minutes are in a trading day, if you divide it by hourly, you'll get like a fractional candle. But if you go on the 65-minute time frame, you'll get an even amount of candles. So it just makes more sense to be on a 65-minute time frame. But that's neither here nor there. Like I said, you start on the daily. You say, do I have any anchor VWAPs that I can use as a guide that's acting as either key support or key resistance? Because even from this swing high, you can see that's kind of been your resistance point there. I got an anchor VWAP from COVID lows, and my code for that is usually white. And you can see that has been acting as support. So you just use those, go off of that, and say, okay, I see some clear levels here. If I were swinging this, I know I got a stop loss right here. I know I can play a breakout here, or if I did catch a swing from support, then I know I can take profit here. So I see hard support and hard resistance, right, between these two anchor VWAPs. And in between here, we got anchor VWAPs from earnings and stuff of that nature that we can use, right? So we start with that. We got two critical points. We got another point that's been acting critical for the past few sessions since since December. So We take that and we say, okay, I like this. We go to the 65-minute time frame and we look at those levels and say, okay, I see this clearly has been a key level that we're at about 208, 209. So then you say, I want to add 50 cents or $1 as my breakout level. So I'm going to say 210. I need this above 210. So what does that mean? Now I turn on my day trading indicators, which are pivot points, volume, 8 EMA, 21 EMA, and the regular VWAP. So I say, now I need candles to close above that 210 level with volume. I'll buy a pullback and then I will take an entry. I'll let my play go. I'll set a trailing stop loss once I'm up 10%. If I like it, let it run with that trailing stop loss. If not, just take my profit, go on about my day. You can do either or. And that's kind of how you do it. And you let it roll and you put on the 30 average for your volume as well, so you can see how much volume truly has been coming in, because you'll see bars you don't know if that's a lot of volume or not, but this orange bar is showing me the previous 30 candles, the average of it. So if I see bars shooting way above that, I know we got a lot of relative volume, high relative volume. So that's how I go. Make sure you like and subscribe. I appreciate you guys, and I'll catch you for the next video.